Well, hello everybody. Michael Silva here. Got a good episode today. We're going to be discovering the significance of a crucial stock market level, wabam, that just keeps reappearing. So in this in-depth analysis, we'll also explore the options market expectations for the CPI report and examine the changes occurring within the Fed's balance sheet and liquidity in today's stock market brief show. Let's get into it. All right, welcome back. So yes, tomorrow, 1 hour before the stock market opens, we are going to be getting some inflation data. Many people have been saying that the inflation data no longer is going to matter, but I can assure you as soon as this hits the tape, you will see movement in the market. It is bound to happen, and who else but Jerome Powell is going to be paying close attention to that CPI report. As far as expectations goes, consensus is saying 5.6%. Now, the Fed's goal is to bring the inflation down to, as we know, 2%. So it has a while to go. We'll see if it comes in at consensus or if it comes in above. Be careful if it comes in above. Let the market digest the news to see how it's going to play out. But overall, we are still very high. Jerome Powell's over there just wondering what's going on. You can't print unlimited amounts of money and then all of a sudden inflation just can't cool off. Take a look over here at the probability tool. We're still looking at a higher probability of the Fed coming in and doing a 25 basis point hike. We discussed that in yesterday's video. It cooled off a little bit. I'm sure that after the CPI and PPI report come out, we'll see some more, movement within this. But overall, the market does see them cutting rates here in the near future as well, despite Jerome Powell saying on his last meeting press conference, he said that's not the base case overall, but obviously economic conditions can change. If you take a look at the Fed balance sheet, we saw this big spike up in the balance sheet after many months of tapering, and then it busted through that level. I'm just pointing out now that yes, we are starting to taper again here, so we'll see if this is just pulling back to go higher or if we are going to start tapering off more. If you take a look at the reserve balances, that's in red, and you take a look at the S&P 500 in blue. This is interesting. This is something that Sven Henrik pointed out, that the correlation between the two have been very, very tight. So when when there's draining of reserve balances, when it starts going down, the S&P 500 goes down too as well. This is a good just barometer of, hey, is there a liquidity being added or is it being taken away? And I just wanted to call out, it hasn't updated fully yet, but you can see the S&P 500 has been moving up and liquidity has been being drained. So if this is going to continue to point down, this could be a warning shot for the S&P 500. So it's just something that we need to pay attention to. Powell did mention tightening credit conditions from bank turmoil is unclear, but could be very real. The question is how significant this credit tightening will be. It's really kind of rule of thumb, guesswork at this point, could be quite real. And then Michael Cantrow had pointed out the other tightening cycle. Commercial banks are tightening, right? Lending standards. And says that there's three conditions that precede a recession. Fed rate hikes, which we have, right? That's been going on. We have inflation problems, which has been a problem, and the Fed is still fighting it. And then it leads into tighter lending standards, which Jerome Powell had mentioned could be a very strong possibility. We have all three. That leads us into a recession. And more importantly, CNBC will coming out with more markets in turmoil faces on their blog articles. And if you think that these images are cool that I've been posting, they are all AI generated, which I found very interesting, right? I've been playing with Midjourney. It's been fun. Let's take a look how the S&P 500 finished today. It finished unchanged. If you heard that word, that's what it means, unchanged. Dow Jones was up slightly, NYSE was up slightly, small caps were up almost 1%, so those did fairly well, and the VIX ended up the day a little bit higher too as well. Relatively unchanged as the market is moving into, obviously, that CPI report, PPI report, and even financial earnings. If you look at the 11 sectors, everything was in the green except for technology. That was the heavyweight to the downside. Overall, the stock market, if you're trying to trade this the last few days, and I even posted a tweet about this, it's been very difficult. It's been very choppy. We haven't been really having solid trends. We've been getting gap downs and it closes at the high of day. Very hard to navigate this. So it's important to understand the expected moves because those have been giving us opportunities to buy when price is down near it or under it. And then all of a sudden it started moving up. So that strategy has been working well. in this environment. But if you take a look here at ES, just here on starting on Tuesday, right, we started moving up, and then you can see we started the day moving down, we came back up, and then when the cash market opened up at 6:30, we moved down, and we started just rallying, very choppy ride up. It's clear that this is, obviously we had a big dip, a smaller dip, and you can see it tightening up, and then we just had this waterfall move right back down to near the lows of days. So just a very volatile type trading action. Now I want to go into the the S&P 500, the SPX, and just call out this very important level. There's a couple levels that we need to be well aware of, and that right there is 4,100. The price action has been sucking just back into 4,100. It gets outside of that level and it comes right back in. There's a lot of volume traded at that level, so it's acting as a very strong magnetic point. Now, when we start breaking from this level, we've noticed multiple times volume tends to pick up, and it can be quite aggressive when price action breaks from it. So we are right here at that 4,100 line. We are coming into a very important macro week and also earnings weeks. Earnings is kicking off. This can be where we see another big break, whether that's to the upside or downside. I don't know, right? You can look at this and you can see right here, we saw it act as a level of support. It acted as support. It acted as support, right? And then it broke down, and then it broke down tremendously here. You can see it came back up, boom, boom, multiple times, and now we're right back into this level as price action just keeps, pushing away and then sucking back into it. Some might look at this and be like, oh, it's an advanced inverse head and shoulders, right? And this was a head and shoulders pattern, right? You have the head and shoulders, and then, you have the upside down over here of it. But really, we're just kind of going sideways. Now, if I break down to the 11 sectors, as we've already seen a big move up like this, what's been really driving it? Well, we know that tech has been a strong performer in recent trade this year. But if I look at this from an RSI standpoint and I rank it from strongest to weakest, so strongest is up here, right? And then it goes like so, boom, boom, and then boom down to the weakest, XLF. What you'll see here is the top dogs is XLP, XLV, communication services, and then utilities. So up there in the top four, three of them are pretty, defensive type names, showing the most strength relative, if we're stacking it via the RSI. Overall, the moving averages that we have on the screen there is the 20 is blue, the 50 is red, and you can see the worst performing sector is obviously financials, and these are the ones that we're going to have to pay attention to because these are the ones that are going to be reporting earnings here on Friday. Now, if we take a look at the S&P 500 from an options expected move going into tomorrow's report, remember, this opens up, the report comes out an hour before the market opens, so pay attention to these levels as soon as the cash market session opens or even pre-market. Now, I want to call out some interesting things here on the S&P 500 and then the Qs, okay, because there's a very different landscape. As we know, and what we've been saying is the market's been held together by tech stocks, and tech stocks now are showing a little bit of weakness, right? The run has been very strong, and now they're starting to back off a little bit, which could hurt the S&P 500 if financials report and the market perceives it as bad news. And then energy, right? Energy moved up. Energy is another important sector, and that moved up on the OPEC news, and it's been just kind of going sideways, a little bit of choppy. And if that pulls back, that can also, damage the S&P 500. So overall, what am I looking at? I'm looking at month-to-date anchored VWAP, week to date, and then also a flattening 5-day moving average that price is currently above. As you can see, price is above all three of those. So this is where it's important. As long as price can stay above these levels and hold those levels, that to me is a bullish sign. So as it stands right now, we're above it. Can we open up here in the cash market session if the market perceives it as bad news? Absolutely. Then what? If the market opens up down into this area, I'd be looking for either one, a break lower down to the lower weekly expected move. It might not be a straight shot though. If you start to see a reflexive bounce where we flag up, pay attention to the 5-day moving average, pay attention to the week to date and the month to date anchored VWAPs, because price can simply move up and maybe suck more people in, and it could bear flag itself back down. Remember, a move strong down like this, flags and moves down, this can open the door still for the lower weekly expected move, and there's plenty of time left in this trading week. Now, from a bullish perspective, if we hold these levels and we stay above it, that is the open door to the upper expected move. Now, if we open up here, I'm not going to be chasing into that. I'd be looking for a potential pullback more into this type of area where price comes up here. Maybe we get some sort of a flag, and then we can flag back up to about 416, the upper weekly expected move, if the market perceives it as good. But it's always important to let the market digest what is taking place overall. So that's a couple of things that I'm looking at currently. Now, price may just open up where price currently is, right? What would you be looking at then, Mike? Well, I'd still be looking at this as a potential area of support as they start moving up. And then I'd be looking at this as potential resistance to break through. And if we can start breaking through this kind of level, right? Price comes up and we could do something like that where we have higher lows. And then I'd want to see a break higher to play into 413.69 and potentially even 416.82. That'd be more the bullish perspective. You got to keep in mind, it's been choppy. It's been hard to make money. If you want to see what I've been making and how I've been trading, you can go to my Twitter and you'll see it. I also am starting to report. I reported my quarterly statements to the United States Investing Championship, so that should be up here within this month or early next month of my standings for year to date, if you want to just look at that performance as well. But overall, what are we doing? We're just in a chop box, right? Building open interest, just building open interest, and we're probably going to be exploding from this level, which makes sense because when we go back to the 4,100 level, right, we're just been building open interest at a very key level, critical, crucial, right? And we have all of this stuff coming up. We're going to see an explosive move in the near term. If you take a look at the Qs, this is where it gets a little bit more interesting to me. These are the big dogs, right? And if these break down, I mean, you're really going to need help from financials, and you're really going to need energy to perform to hold the S&P 500 from breaking down. But this is what I'm seeing. I'm seeing a high, I'm seeing a lower high, I'm seeing a lower high, and I'm seeing a lower high. Then I'm seeing a low, and I'm seeing a higher low, and I'm seeing a higher low. Okay, so as it stands, what do I see? Well, I see a strong move up, and now price action is what? It's contracting. Boom, it's contracting. It's coiling up, and it's been coiling up for quite some time. Now, it's under what? It's under, unlike the S&P 500, it's under the week to date, the month to date, and the 5-period moving average. This was actually one of my early day trades today where I was looking for a break back up the daily VWAP, which is not on my screen. It looked like that right there, that blue line, and I played it into the 5-day moving average. And that was it, right? Because, well, luckily, I didn't know that this was going to happen, but it did sell off. Now, as far as the daily expected moves, we're down here at 311.69, and we're up here at 319.97. You can see 310.22. That's the weekly. 325.88. That's the weekly. So as more of a bullish case, I would want to see price break this high. So that would change the series of lower highs, right? We have the stair steps stepping down right now, and then that would also, potentially stair step up and make us do higher lows as well. So that would open the door if we start breaking that to 319, just call it 320, and then potentially even higher. But if we start taking out this low, that opens the door to me to retest, obviously, right here, that low. But then also because, we have a lot of volatility packed into tomorrow's trading session, it opens down here for the daily expected move. Now, remember, it comes out an hour before the market opens, so we can very well open here, or we can open up here, and that's probably what's going to happen, is we'll open up either above this area or below this level. Now, I don't want to chase those moves, so once again, what do? Well, if we open up here and we scream up, maybe that'll come to the daily expected move. Okay, it is what it is. Maybe we'll find intraday trades in that area. I would like to see a pullback and act as support, potentially U-turn, and then head back up to close at a high of day. Or if it comes back down here, I'm not going to go short, in the hole down here. I would look for potentially the same thing, a bear flag, maybe a retest of the week to date or 5-day declining moving average, and I would look to re-short what's called, what I call a U-turn, where it potentially comes back above, and then you boom, boom, you short back into it on that weakness to potentially play it lower, and then you just, trail a stop down. That's all I got for you on today's episode, everybody. Action-packed, gave you some scenarios. That's what I'm looking at going into tomorrow. See y'all later.